So remember we talked about support and resistance earlier before. All right, we talk about support and resistance now. So we are going to be talking about market structure and fib retracement. All right, this is the key to trading. This is trading cannot move beyond this. All right, trading can only move in this particular manner. So for the market movement, we only have three market movements. I'll be mentioning them here. Now, the first one you can easily see the market do is an uptrending movement. If your market is trending up, you are going to be seeing this particular way. We are not going to waste much time here. All right, we're going to be seeing this particular direction. If your market is actually trending up, giving you higher lows and higher high there. All right, so we're going to be having our higher lows here, and we are also going to be having our higher high around this point here. The same thing applicable to this point here as your higher high there. All right, and when you are getting a new higher high there, you're going to be getting a new break of structure. All right, you're going to be getting a new break of structure there. Anywhere you are finding a higher high, the market has to break new structure before giving you another what's higher high there. All right, and a pullback must happen. All right, and a pullback must happen. For this kind of movement, we are currently having the up trading movement. As simple as that, and we are going to be getting a break of structure as said. So let me just quickly mark that out. So all this is going to be our break of structural level. All right, all this is going to be our break of structural level to the upside. We still have the same thing applicable to this particular point. Now, this one here is for an uptrending movement. You understand? This one here is for a movement that is actually trending all the way to the upside. Remember, you can only make use of fib retracement when the market is either trending up or trending down. So for the down movement, we are going to be seeing something like this. Market gives you a new low and pull back again and gives you a new low also and pull back and gives you a new low also. So for this movement, we are going to be getting lower highs and lower low. Here, as simple as that, as I said, market cannot move beyond this. Market can only move in this particular way. We are still going to be looking at on it on the chart so that you can easily get it. I believe you might have understand this particular concept before. So you just have to learn it until you get the real point there. All right? Lower high and lower low. This one is meant to be lower low. Here is a mistake. All right, this one is meant to be lower low there. Oh, okay. So we're having our lower low here. We're also having our lower low here. We're also having our lower low here also. And then we are also getting our lower high there. All right, as simple as that. So this is clearly for the bearish movement, which is the trending movement to the downside. All right. So let me just quickly mark that. This one is uptrending movement, uptrend here. This one is down trend. All right, downtrend here. And the other one I told you is consolidation. Consolidation means that market doesn't has a clear direction. Either it's consolidation or it's ranging. Alright, in this particular way, you do not see the market giving you a clear movement. And when the market is ranging, it's going to be aligning on a resistance point and a support area. As simple as that, there's no two ways around it. Either the market is reacting on a resistance area there or on a support level there for a ranging market. Alright, let me just quickly identify it fast. Alright, for a ranging. Alright, or you can just put it any short form there so that it can be clear. Alright, for a ranging market, just like that. Alright, so the market can always move in this particular way. Remember, from here for the downtrend mode, we are having a break of structure here to the downside. We're also having a break of structure also from here to the downside, and same applicable to the last point. Remember, the market has to give you new lower low for it to be called the next break of structure here. So if you are saying this, the market can easily pull back on this particular way before what giving the next drop from there all the way to the downside. So let me just quickly leave this one pending here. So you can see the most major levels we are having. All right, now I'm going to be telling you on the minor movement. We have the major trend and we have the minor trend. Minor trend can happen inside the major trend. Are you getting the point? You can always find a minor trend inside a major trend. Okay, let me just emphasize on this real quick before we can go to the chart. Now, let me just say we have the market giving you an up trading movement. When the market has given you a new high, if this market is coming down from, let me just say you view this market from the 4 hours time frame. Now, if it's coming down like this, if you go to like the 1 hour time frame, you're going to be seeing a structure of lower lows and lower high and lower low all the way to the downside. So this movement can be called a minor trend here. All this movement that happen inside here can be called a minor trend inside a major trend. Are you getting the point? All right. So if you notice that the market has given you to this region, it can easily buy from there, giving you a next break of structure from there to the upside. All right. So that's any movement that happen inside a trend there is can be called a minor movement. So this is where you make use of fib retracement. All right. This is how you make use of fib retracement. Now, if you notice that the market is trending up, alright, let me just emphasize on that. If you notice that the market is giving you something like this to the upside, the break of structure here, pull back, and then gives you a next break of structure, and the market started pulling back. That is when you're going to be taking your fib retracement there, putting it either from the low here to the next high. Alright, it may highly have to be at that particular spot. You can see the way I position it, it has to be like that. So for the fib zone, if you check clearly, we have the zero point 0.5, we have the zero point 0.6, and we have the zero point 0.7 area. Understand this properly and you are going to be good. So if you want to take out your next position, it's going to be anywhere around the zero point 0.6. As far as the market has go below that zero point 0.6 here, you can start looking out for any possible entry point from there to the next high. All right, to the next high, you take your buy position from there. After you get a confirmation, I've already issued on the confirmation level there. Sometimes we are having a candlestick confirmation. We can easily have a chart pattern confirmation. Any of those stuff there can be a confirmation for the next buy to the upside, giving you a new high. So around this point here, you're going to be taking your buy entry point. For instance, you are going to be going long here, putting your stop loss a little bit above, and your take profit is going to be for the next break of structure you're having. Stop loss is just going to be a little bit above, below the zone here. All right, below that zone here, then your next take profit, because you already know that for a structural movement to the upside, the market is having a higher chance of 90 to 80% to take out this high here. So your take profit is going to be, your overall take profit is going to be above that level. All right, so fib retracement is going to be telling you when to get in or where to get in there. All right, now if you check clearly, we have the zero point 0.6 here. Mainly the zero point 0.6 level are what we call liquidity in the market. Are you getting it? The zero point 0.6 level are mainly liquidity. If you don't understand anyone, you can notify me after watching it so that you can understand it properly. I'm going to be taking it step by step from now. Or step by step. My schedule has really been tight. That is why. So from now we are going to be looking at it step by step. Alright, the same thing applicable to a bearish movement for a market that is currently giving us a structural movement all the way to the downside there. Alright, for the pullback, you're just going to be waiting out for your fib levels there to take out that particular trade direction, putting your fib retracement from this spot here to the next point here for the markets to get in either the zero point 0.6, around the zero point 0.6 to the zero point 0.7 here. Then you can, around that zone, sometimes you can find either an order block area or a fair valid gap that the market can trip in before the next sell will hold. Exactly. All right, exactly. This is how I normally look at for most of my trade movement that you are seeing there. First of all, check out the trend direction to know what you are doing. All right, so let's quickly bust into the chart. Let's see what we are having in the chart. We are going to be using, okay, this is currently BTC, so we are going to be using BTC in this case. So, firstly, go to your higher time frame to know your overall structure of the market. So, let's look at the 4 hours time frame. Let's see. Well, looking at the 4 hours time frame, let me just wait for a few seconds. What structure are we seeing on BTC? What structure are we seeing here on BTC? You can notify me there. All right, so I believe you know the structure as a trader. So if you check clearly here, we are currently bearish from here all the way to the downside. We are currently bearish from here. All right, and when the bearish movement is holding, it's giving you a structural movement. If you check clearly, before that bearish movement started, BTC is a little bit bullish from here, all right, all the way to the upside. Now, I did not explain this earlier. Now, if we are having something like this, let me just say the market is giving this kind of formation of a trending movement to the upside, and the market eventually go below this higher low that we are having there, there's going to be a shift in structure. Alright, if the market go below this point here, there will be a shift in structure, which is this particular point. The market is not meant to go below this point. If this market go below this point, there's going to be either a market structure shift or a change of character. They are all the same thing. So we are going to be putting the short form as change of character, all the way from uptrending movement to downtrending movement. The same thing applicable to the bearish part. If the market is currently holding on a bearish movement like this, all the way to the downside, the market is currently holding like this to the downside there. So if the market possibly go above these points here, broken out this level here, there's going to be a shift in structure from bearish to either an uptrend or consolidation. Anyone can possibly start holding there. All right, are you getting the point? Anyone can possibly start holding there. So that is what we are normally looking at for here in the market. Remember, as I said, the market go above this last higher, lower high there, there's going to be a shift in structure. So let's quickly go straight to the chart. Let's see how this things normally play out. If you check clearly from this starting of this bullish movement we are seeing here from the 4 hours time frame, the market is giving us highs and lows. Let's quickly mark out that very quick. From here, what can I call this part? I can call this part a higher high here. I can call here a higher high, and I can easily call this part also here a higher low. All right. Let me just clear market real quick. So from here also, I can also call this part a higher high here, and also I can easily call this part here a higher low. All right, because the market pulls back and gives us a new higher low there. All right. So you can see from here we are having that kind of movement to the upside as a structural movement. So the market pull up massively and gives us a new higher high from there, and pull down a little bit and gives us a new higher low. Alright, so we are going to be using these confluences. That is what the confluences we are using to trade. If you notice that the market is giving you in this form, you wait for a retracement and taking your buy. Wait for a retracement, taking your buy. Put your fib setting from here to this particular top. You can see that the market push around that zero point 0.6 level, which is this end zone that we are having here. You can trip in for a buy there, or sometimes the market can push to the zero point 0.7 level. So make sure you see a confirmation there. You can see from this particular massive movement, we saw a bullish engulf candle. I list it for you there. There must be a confirmation that is guiding your setup there. There, you take in for a buy from that particular point, going in for a long, putting your stop loss just a little bit above the range, above that particular zone. Let me just say around this point here. Then your next target is going to be to the next high, because the market is going to give you a next break of structure from here. All right, market is surely going to give the next break of structure from here. So if you check clearly there, if you check clearly, the market gives us a particular movement. After the market is dropping, we are meant to see this market drop around this particular point and gives a next pull. Let me just say we are meant to see this market drop here and gives a next pull, but unfailingly, the market fails to do that and gives a shift from here. Remember, we are not meant to see the market breaks below the higher low there, the way we say it here, the way we analyze it around this point. We are not meant to see the market break below the higher low there. So if you check clearly, the market goes below the higher low, leading towards a change of character, market structure shift all the way from the upper level to the down part. If you check clearly from here, after the market structure shift, we have a little pullback and the market started giving us lower highs and lower low. Simple as that. If you notice, the market has shifted, giving you our lower high there and our lower low has already been taken. Then you wait for a possible pullback. As simple as that. Lower high and lower low, wait for the markets to pull back on a certain range, putting your flip zone from year to year, because you already know that the shift has already happened. Then make sure it's around this particular point you are taking the entry from, putting your flip zone around this particular area here. Then you can see from this part the market push above that, little bit above the zero point 0.6 here, due to this FVG gap that was created from this particular spot here, mitigate that area there, and then boom, all the way to the downside. So if you are getting in on this kind of entry point from here, taking a short position from this particular point here, then make sure you are putting your stop loss above the range. It's very important, because markets can always manipulate. Make sure it's above this particular area here. Then your next target is going to be just after a break of structure happen. Let me just say towards this particular part, because a break of structure is going to be short on this movement. Is going to be short. The market must give you a new lower low there. All right, as simple. But if you check clearly, this market push massively to the downside before that pullback happened. If you check clearly, you can see the way the market keep dropping until it gives us our new lower low around this particular point here, which is this particular level here, as our new lower low there. So if you check clearly, you have a lower low, then you now have a lower high here. Let me just quickly write that up so that you can see it. We have our lower high here. As simple as that, there's no two ways around this. Market can always move like this. It's left for you to identify what the market is currently doing. So let me just quickly remove this here. All right, it's left for you to identify what the market is currently doing. So if you notice that the market has given you your high and your lower low there, place out your fib retracement from this particular spot all the way from here to this particular level here. Your entry point is going to be around the zero point 0.6 to the zero point 0.7 level. Wait out for a confirmation there, lying out there. You can see from here we have this bearish engulf candlestick that's overcome this bullish candle. I teach you on that. I teach you on that. Right. So after that, you can start looking out for the next shot. After that closure there, you can start looking out for a possible next shot, putting your stop loss a little bit above that zone here, and then your next take profit must be at the next lower low because the market is going to drop all the way massively to the downside. Are you getting the point? So that is how we normally look out for this. All right, the same thing applicable. If you check clearly, the market gives us a break of structure from there. All right, after that, the market pulls back there and gives us a lower high there and the lower low. All right, there's no two ways around it. Lower high here and lower low. All right. So if you watch it, if you have any question, you can easily ask. All right. If you have any question, also you can easily ask. You can see from here, from this movement here, we are having a minor structure. This market gives a minor structure from here to the upside. If you check clearly on your 1 hour time frame, it's going to be more clearer. From here, you can check clearly. We have our lower low that was produced here, which is this particular bottom here, and we have our lower high there at this particular point here. We also have our lower high, but I can't call this point a lower high because a new lower low has not been formed. So I have to see a new lower low to be formed before I can start calling this upper level here, which is this particular point here, a lower high. As simple as that. All right. So if you check clear, the market retrace back to this origin here around the zero point 0.6 to the zero point 0.7 using fib retracement zone. It push up. This one push massively up there around that zero point 0.7 there, then start pulling all the way to the downside. All right, as simple as that. If you go to your lower time frame here, you will notice that this retracement that happens all the way from here gives a structural movement. Let's quickly look at on that from the 1 hour chart. Now this is the 1 hour chart. All right, this is the 1 hour chart here. If you check clearly here, we are having a structural movement from the 1 hour also. All right, it's all over the market. That is how you can use to define most of your entry point there. If you check clearly, we have our higher highs here and our higher lows there. Higher highs here, higher low here. All right, higher low this particular point. We also have our higher highs at this particular point here. We also have our higher low at this particular spot here. All right, as simple as that, the markets pull down. You can see after the higher highs and higher low, the market gives us a new higher high. As far as that market has given you a new higher high there, that is where to positioning your fib retracement from this particular bottom here to the top. All right, you can see the way the markets trigger around the zero point 0.7 area because we have this other block line around here. So that is the major confluences why the market taps in on that zero point 0.7 area and ride all the way to the upside. So if you are catching the trade from that particular zone there, you are going to be putting your stop loss a little bit below the zone here. All right, you have to put it below that area there, and then your next target must, if you're going in on an overall TP, it has to give you the next break of structure to the upper self. All right, you can see the market strip in after it gives you the next break of structure here, the market starts reacting back to the downside. As simple as that. So if you don't understand anything or you're finding it difficult to understand some things there, you can also notify me after watching the video. All right, we have patterns. All right, so these are the confluences, the fib retracements always work in a structural movement. So we have patterns. I'm going to dish out a video on pattern. All right, so that you can understand the pattern that we are having there. All right, we have different kind of pattern formation. So I'm going to do that. I've already teach you on that, but I'm going to do that and still show you on the chart so that you can see it clearly.